I'm curious to know your thoughts on not the sell-off itself, but how the changes in credit, in equity valuations over the past few weeks are changing the way business is getting done in Silicon Valley, the way budgets have to be changed, the way hiring plans need to be changed, if at all.
I would say it's probably less magnified or less amplified than you might think. It's largely in the financial sense out here. The perspective's been that everything was fully priced, not just in the public markets and with the big FANG names, but with a bunch of the new issues, everything from the Twilios, which has been performing really well, and MongoDB and others. Had been fully priced. That's extended into the private markets where valuations and late stage growth are just sort of through the roof. So I think people have been expecting somewhat of a pullback, probably some anticipation and hope that there's a little bit more of a pullback in the private markets because things are so exceptionally priced. So I think in terms of budgeting and forecasting for the next year, people are kind of feeling like, look, everything was a little bit out over its skis anyway. This was probably for the best, and it's business as usual on the financial front.
Dick, a number of factors are being ticked off in terms of why investors are selling out of tech right now. The possibility of regulation, more focus on privacy, and what happens to data moving forward. So you've got China and this trade war, the possibility of slowing growth globally. What is the thing that you think is the biggest risk for the sector?
Well, it's all of those, and you could keep going. Regulation both at home and the possibility of regulation abroad. An increasing number of countries wanting to talk to the executives of some of these companies. When you bundle all those things together, you just have to look at it and admit that everything was fully priced and risk was certainly underpriced. And so I think we're seeing the weight of all those things piling up on these companies and causing the pullback.
Dick, speaking of those culture issues and how they're sometimes showing up in stocks, I spoke to PayPal co-founder and Affirm CEO Max Levchin just yesterday. He was talking about how this is playing out in Silicon Valley for companies considering what to do next. Take a listen.
I think Silicon Valley is back to sort of the original question, is going through a little bit of a reckoning where some companies like Affirm are saying, hey, we've always had a true north. It's a good time for us to be employers because people come to those companies more. They want to work for companies with a true north. The ones that thought they did but lost it or maybe have not been able to communicate it all the way down as well as they should, or the ones that never had it are scrambling to recreate that sense of true mission and the ability to frankly say no to certain things, even if those things are very profitable.
Catch the full conversation on my Fort Knox podcast this weekend. But Dick, how much is that conversation picking up speed and volume among investor circles and founder circles where you're running in Silicon Valley about the idea that, yeah, these issues can really have an effect on the way these companies end up showing results?
The short answer is a lot. I'll say a couple things about what Max had to say. First of all, Max speaks so seriously that whenever he could read your fortune and you'd throw yourself out the window, it sounds so foreboding. But the second thing I would say about what Max is saying is, it's true. There was, I would say, from maybe 5 years ago, a rush to get into the companies that were going to deliver, you the most financial success. And there's a bit more of a return to, hey, I want to go to a place with, with a moral center, with a sense of self-reflection and a real sense of purpose. And I think we're all seeing a bunch of these companies, or at least several of these companies, with a need to do that.
So where does that leave Facebook?
Well, I'll say this about the Facebook stuff. That article in the New York Times, when you're a juggernaut for 10 years and things are kind of constantly going your way and you haven't had one of these sort of existential moments, that can cause a lot of employees at the company who haven't had to deal with that kind of stuff to sort of be frozen in their tracks and wonder what happens now. At Twitter, if there was a negative article about us in the New York Times, we called that Tuesday. So you build a sort of resilience to those sorts of things and you build a resilience to them for a couple reasons. One, the company and the people in the company start to realize, okay, well, we've been through tough times before and we came out of it and everything was fine, and I trust that leadership's going to be forthright with me about what's going on. And then secondly, you know that, look, you know, even though they talk to 50 people, after a few more days you find out, well, there are other perspectives on what happened in that conversation, and that's one side of the story. And no disrespect to the authors of the piece, they spoke to a number of people, but we're already hearing from folks like Alex Stamos, the former chief security officer. That's not exactly what happened in that conversation. Anyway, long way of saying, once you've been through this once or twice or a few times, the folks in the company start to build a sort of a thick skin about it. If you haven't been through that before, it can be a real existential moment. And you know, I think this is a real moment for moral courage and self-reflection on the part of the team there. And I have every anticipation that strong, resilient folks like Sheryl Sandberg and Mark will step up.